Good evening, traders. We are on a very funny date, actually, 22nd of Feb 2022. And if you write it left to right or right to left, it will still be the same 22022022. And the market's behavior was equally unique and funny also, upside down. Opens big gap down and shows weakness for most of the day and then bounces back. I thought of sharing the title "What Doesn't Kill You Make You Stronger" for the market today because um, the index is not killing this support zone on the downside as of now, and so it makes this particular support really strong. It's been holding the index so far so good. 16,800 and a little above that. So 16,800, 900, a little below that psychological 17K mark. Every time the index tries to break 17K, stay below 17K, somehow from somewhere or the other, it manages to bounce back. So it's getting stronger. And when eventually such strong supports break, um, yes, they lead to uh, some decent damage. Nevertheless, we are here looking at the daily chart of the Nifty futures near month contracts headed for the expiry this Thursday. Volatility mm, is at its peak, and you will feel, if you're a short-term trader, you will feel a little crazy. I can understand that. But the trend, yes, I know it's boring, but yes, the trend is very much down. The momentum indicators have started to roll down and they are breaking below its previous lows. These are not good signs. These are not great signs. We've got a good bounce back today. Uh, is that a dead cat bounce? We will get to see tomorrow at max by day after tomorrow because generally dead cat bounces do not last for a day or two. So if this is a dead cat bounce, this particular low, this zone that I've drawn here, I mean this particular low, today's low, will be broken within the next 2 days. If this happens to be a dead cat bounce, and in that case, of course, further weakness will open up. Is this the bottom? And can we do we have enough evidence that this is the bottom for the market at least for the rest of this month, which is not much, just this week, or for let's say a little more than a month? Too early, too early to say that. 75-minute time frame will give us a bounce back. 75-minute time frame will give us a downtrend. So in terms of the trend and the momentum, the sectoral participation, overall sentiment, I'm sorry, there's no evidence that this, so that we can call it a bottom yet. I know when we look at charts and we try to analyze, we're always late. We wait for the price to develop the trend and then we hop in. And that's what the subject is all about. You wait for prices and expect the trend to continue. But even from a contrarian point of view, technically, I do not see any significant evidences which can give any hint that this is a bottom. So, sorry for the predominant long traders. What about the short side? Are we looking for further weakness? Now, there's enough evidence that the market is weak. There's enough evidence that the sentiment is down. There's enough evidence outside that the overall equity markets worldwide is going through a correction. So, internally and externally, equity as an asset class is going through a corrective phase. And so the possibility of further opening up on the downside is definitely there. We don't see any divergences on the charts as of now. The daily charts are weak. The 75-minute time frame charts have moved into a downtrend. And momentum on the weekly charts have also started to come down. The moving averages have slowly but surely started to roll down like it did a couple of few months back. So yes, enough evidences that we can expect. So if the market breaks down to newer lows, that should not be a surprise. Yes, if it bounces back and finds itself back to 17,300, 400, 500, that will be a definite gutsy move and show of strength. And it will be difficult to capture that kind of a bounce back, to be very honest. which means strategically one should be more biased towards the short side than the long side. If you do not short the markets, stay on the sidelines, enjoy the show, wait for the volatility to die down, wait for the dust to settle, wait for the Russians and the Ukrainians and everyone in the world to just feel little relatively safer, and then you can start to uh, add some stocks in your medium to long term portfolio. Maybe it will be a little late by then, but uh, that's where we are. Bank Nifty, yes, also dealing with its previous swing lows, which is not too far away from its Jan lows, 25th of Jan, 15th of Feb, and now. So yes, what doesn't kill you makes you stronger. Let's say this support is getting stronger, whether it will hold or not, like a belt hold kind of a pattern on the Japanese candlestick parlance. Um, Same story. Break of this low within the next 2 days, and I think we'll be gone for some time. Small cap and mid cap are getting hammered, literally. That's I think we discussed this in our recent videos. The broader markets are getting hammered big time, and it's the index heavyweights which are doing relatively better off. A little bit of here and there, few stocks which are doing okay, but overall, the mid and small caps, I would strongly request and suggest stay away from them. If you are a long only trader, this is not the right time and price. We can see opening lows in them in the mid cap index, and similar to the small cap, gaps down and bounces back, but quite a fall, quite a steep fall, quite a sharp fall, and the stock and the index, I'm sorry, is back to its August 21 lows. So some historical relevance is there, but um, the index has opened up. If you can see, the moving averages have opened up after a long time on the downside. So it will be really interesting to see how far can it extend itself. It is definitely extended in terms of its positioning from its moving averages. It is definitely extended quite a bit than its average. The last time it extended this much was the coronavirus early sell-off. That was Feb March 2020, and the difference between the price and averages was significant. So we are not anywhere there, but these kind of stretched situations is also significant, which means that they will try to bounce back, but the trend is down. You should stay away from them from a medium to long term perspective. Few sectors which are similar to the kind of supports wherein make or break kind of situation you'll find in the CNX FMCG. It's in a strong downtrend as well. But if you take a look at the FMCG index, um, some signs, some basic signs of uh, trying not to fall significantly, because it has already fallen before. When the market was not falling, this sector was falling. So there's not much, I think, room for the sector to fall, and that's why it may be trying to stabilize. So that's one you can take a look at. Uh, Healthcare, I've been talking about sell on a rise, and it's a weak sector. It's also back to its lows. I'm sorry, like this, yes. And if you turn it into a line chart, we don't have a divergence per se as of now, but still fairly weak. Metal was an outperforming sector which is stuck in a range and it's open up on the downside. Energy was an outperforming sector which is still okay, it's not that bad, still holding above the zero line in terms of the momentum. So overall, I'm slowly, it seems like the stronger sector and the stronger stocks are slowly slipping away, um, which is, of course, not a very good sign. Uh, so, what can we expect? What can we expect for tomorrow and day after tomorrow, where we have the expiry? The markets might try to hold on to this bounce back. The index may try and do good to find itself back to that 17,200 and little above that. It's possible. It's not that it's not possible. That today's move was pretty impressive and it can extend. As I said, if today's daily chart is a dead cat bounce, then this low will not hold for the next 2 days. And so, if you want to trade longs tomorrow morning, if the market sustains, you might get some triggers, but don't sit on them for too long. Um, get out of them as soon as possible. If the market stabilizes and finds itself back to an uptrend, you'll have enough opportunity to go long. But this is not the best time to sit on long trades. Short term long trades should be kept as short term as possible. On the other hand, if you get fresh shorting opportunities, you can sit on them. Um, Before I sign off, I keep on telling this, and it tends to be a little monotonous. Downtrends Downtrending markets are always far more volatile than uptrending markets. Psychologically, uptrending markets are much more stable, people are more complacent, everything looks fine, I am healthy, no need to go to the doctor unless something happens. And something happens and you're health wise, you're not fine, then you start to worry, and the worry feeds the health, and you start to come up with new issues in your health. And that's exactly what's happened in a downtrend. Sentiment is beaten down, you get extremely reactive, someone says something, you react on the upside, and then someone says something. So it's a very reactive, downtrending, volatile market. So please take care of your capital, take care of your position, and please stick to risk management as much as strictly as possible. Thank you. I hope these videos are useful. I enjoy making them. Anyways, take care of yourselves and trade well, trade wise.